Hi, it's Joe Mazumdar, Exploration Insights. I'm at the September 2022 Metals Investment Forum in Vancouver, but we're virtual right now doing a Q&A session with the CEO of Liberty Gold, Cal Everett. Cal, how's it going?
Great, Joe. Thanks for having me on again.
No worries. Okay, so we'll dig right into it right now. We're coming off of the summer. Year to date, gold's down about 6%, which is probably surprising. Granted that the dollar, the Dixie is up about 14%, so gold should actually be doing worse, but it's not. But equities haven't been saved. The GDXJ is down about 30%, and gold's sitting right now between 1,700 and 1,750. So I keep getting new 52-week lows on most of my precious metal portfolio, so including Liberty. So right now, where does Liberty fit into this, and what do you think's going on with the market right now?
There's a lot of things that are different about this market than what I've seen in the past. And this, you've got a pile-on trade on the US dollar where everybody's chasing one currency upwards. And this is the first time I've seen it in over 30 years in the business, whether I'm on the representing the buy side or the sell side, where the strongest currencies in the world are going down substantially against the strongest currency. Like it's taking every currency with it. And as long as the Fed stays with its stance of aggressively raising interest rates to take us down to their so-called quote unquote targeted 2% inflation rate, we're going to be still stuck in this one foot in the muck and one foot on this on the pavement kind of market, where you're not really going to nudge yourself in any dynamic direction. I can't see that, at least in the short term. And so when the sector itself, Liberty Gold inclusive, and all the other stocks for the most part in your portfolio, it doesn't make any difference what a public company puts out today. It hasn't really got the eyes or ears of an audience. Like the other day, we went and announced we got a $6 million US cash payment from the last payment on our sale of our Halilá project in Turkey. Non-dilution, 6 million US in the treasury, and the market is starved looking for exploration dollars, and the share price went down by 2%. Okay, that just tells you the market we're in.
Yeah,
And then
it's
after
mostly a
that,
liquidity event. Any news becomes a liquidity event that people
absolutely, right? And when I talk to a lot of the fund managers, if they're going to go out and finance a new developer or an exploration company, they have to sell one to buy one,
yeah, yeah.
right? They're not
That's
flush
my
with
issue.
cash.
Yeah.
And if there is a massive redemption of a fund for whatever reason, or any redemption, they're more prone to move out liquidity, which would be maybe they'll nip into their intermediate and senior producer portfolios
Yeah.
because they can move it out quick and put it back in, right? So there's a different level of interest out there. There's also, in my mind, probably way too many companies out there, and new ones are getting financed every day, and they're competing for the same limited pool of capital. And the sell side bankers, they're not the guys who are really, they're interested in fees, which is logical, right? We all understand that part of the business. But the sell side bankers aren't looking at an aftermarket, right? So in 4 months' time, and the whole period comes off private placement, it's up to the company to find bids.
Yeah.
Because there's no commission in an in-the-market trade that might pay them 0.1 of a cent if they moved a share,
Yeah.
right? So all of that kind of stuff piles on top of each other, and then you get this kind of stagnant market condition. And if you put out something, human nature is very interesting. I've studied this over the years, that if you put out a news release and it's a good news release, but it's a bad market day, and the stock goes down by 2% or 5% or 10%, even though it was a great news release, the market perception is it was a bad release and they won't read it, even though it was great.
Yeah.
And that's the perception. So no matter what you put out, whether it's an assay result, a permit, an economic study, a PEA, a pre-fees, a full fees, if it just doesn't, they'll find something to pick at. Oh, the CapEx is up,
All right.
right? And then the stock will work its way down. And the newest tendency in the market is, how can you justify with a $60 million market cap building a $600 million mine?
Yeah.
And that's where that's all of this kind of stuff just breeds a wave of uncertainty in the business.
Yeah, the thing is that the underpinning would be more M&A in the precious metal sector would make people more confident that, their project or their company would get acquired. We see that in the
Oh
critical
yeah.
minerals sector, but we're not seeing that yet in the precious metal sector. So let's get back to Liberty. So what would make Liberty appealing as an M&A target? We saw GSV, Gold Standard Ventures, get a bid from Orla. That
Mhm.
their project was an open pit heap leach project. So if we go through the factors, I mean, we can go through. People need to know that you've got money, and if we go
Mhm.
through that, you do have money, and you just got $6 million US, and so you're in a pretty good working capital position.
Yeah, well, the Black Pine discovery is sizing itself up to be probably, I'm reasonably comfortable in this, the largest oxide gold deposit in the United States that's not a mine yet. It's got so much incredible scale. And we just announced we linked to the Discovery Focus Area pit, which is 75% of the resource, and the CD pit together, drilling a 750 long link to link them into one big zone. And the numbers were at surface, or really, they were above average deposit grade, close to surface, and the stock went down 2% that day.
Yeah.
Okay, so whether you like it or not, you have to keep doing the de-risking, right? So if you're looking at an M&A type candidate, how much cash have you got? Do you have your water? What's your advancement towards your permitting? And what is your ESG issue, if you have one at all? And what's your level of social commitment? So we just recently put out the ESG study for Liberty. I don't know if you've seen it. And we put out good results, and there's more things that we're working on. And once you tick off those boxes, when it comes to M&A, more people are going to pay attention to you. And when it comes to money, I'm always watching money, as you brought it up. And we should finish this year, I would think, with 16 to 17 million US still in our treasury. And there's
Right.
4 drills operating now.
Right. And this is post a 70 to 80,000 meter drill program and potentially a resource coming out of that from the maiden resource, which was about 2 million ounces, and
Yeah.
the growth in it from potentially range front and then coalescing open pits like the one between Discovery and the CD pit.
Yeah, you can see when you see some of the graphics that are going to come out later on, how Black Pine and Goldstrike and their grades and metallurgical recovery and the average grade of the producing mines in the Great Basin slides right in the middle of the pack, right? And it's just perfectly placed the way exactly we thought it would be. And it's no real different. It's really about scale. Black Pine is enormous in terms of exploration target. Goldstrike is more of the 1.2 million ounce kind of resource. That'll be a nice 8-9 year producer at 70,000, 90,000. I don't know what the numbers are ultimately going to be, right? Because you have to add more numbers to what we're doing work on that too, right? So there's 2 of them in one company.
Yeah, in terms of funding, I mean, you're obviously at a better spot than some other companies that have had to do convertible debt or something else to
Yeah.
to have the working capital to expand their project. But if we talk about Black Pine, we've got the potential for scale, and we're doing the de-risking on not only the property and the land package, but also importantly, what you said was water rights, because we're dealing with a significant drought conditions in most of the states and a lot of other places in the world. But competing for water right now is huge, and I don't think mining projects are like the top of the rank in terms of getting water rights. But you're slowly acquiring what you think you need for a potential large open pit.
Yeah, we don't even draw down on the water table, and the water we've already secured at Black Pine, and we've leased, I think, just over 2,300 acre feet of water from local ranchers who are not using their water rights. So they either lease them to us, or they could end up theoretically having those rights removed, right? So they have to show usage of that water, which is what we look after. And we're also working on purchasing water rights. And we want enough surplus there that we theoretically, because of the scale of Black Pine, even get enough water to handle 100,000 ton a day operation. Right. And remember, that's not all on the heaps. That's dust suppression, everything else. That's what it takes to do these things, right?
Well, importantly, I guess for background for other people to know, like when we look at Frontier Gold and their project, the open pit heap leach there, that was purchased by Newmont for whatever $3 billion. The important thing, as soon as they figured out they had a resource and something of value, they got the water rights next door. And de-risking for M&A is an important function.
Yeah, you have to. And once you've got water, then if you're a big producing mining company, you go into a jurisdiction with minimal water, you're going to pay through the nose for that water.
Right.
And you may not even get the water you want, and your deposit could be mothballed for a long period of time. And so Black Pine's a bit unique. It's in the Great Salt Lake Basin. There's no environmental issues there. There's no fish. There's no timber values. There's hydropower to site. We own land there. We own the ranch. We have a formal office built there. And now we're securing things. Like when we went out and bought a square mile of ground that came up for auction, we bought it on and part of the Rangefront deposit actually sits on that southwest corner of that property. And we never told anybody, because I'm not going to go out and advertise what I'm up to. I just won't do that. It's not what sound management would do for any public company. And we ended up buying that mile, which was key to putting the heap leach pads. If anybody was paying attention, went up for auction. We're the only ones who showed up, and we got it for $640 US. Okay, that saves the company millions just by being intelligent in how you approach the different stakeholders of the government or forest services, the Bureau of Land Management, everybody. You have to have a good relationship.
All right. Okay, well, I think we'll close it out there. I encourage people to check out Cal's presentation, and Cal will also be at the Precious Metal Summit coming up in September, and the conferences in Colorado. So this is a breakdown of the gold market, where Liberty Gold's Black Pine project fits in it with its de-risking, and also upside on the exploration side on an updated resource coming out the end of this year to the beginning of next year, and a well-funded junior explorer, which is kind of rare right now in the market. So thank you very much, Liberty Gold, Cal Everett, for joining me, Joe Mazumdar, Exploration Insights at the Metals Investment Forum, September 2022 in Vancouver. Thanks, Cal.
Yeah, you're very welcome. If you need anything else, just give me a ring anytime.
All right. Cheers.